Hi there, Serial Trader here. It's a good time for a Bitcoin update. So since the last video, we dug just a little bit lower, but it looks like we potentially have a hard bottom in here, and we'll have to go through the shorter term charts to go through some potential different interpretations. But overall, I mean, this is just a technical dream setup here. Okay, you have this clearly impulsive five-wave structure up from those December lows. Now you have this clearly corrective structure down. Simply put, 5 up, 3 down from the June highs. That clear correction from the June highs. Now we're just basically debating, well, do we have a little bit deeper to dig here, or is the bottom in? And I'll kind of make the case for both scenarios, although I think if there is any more downside, it's probably quite limited, and we'll get to that in a bit here. But some things I want to point out. So we've done basically in between a 50% and a 61.8% retracement of this overall move up from the December lows, and that's a very typical objective for a wave 2 retracement, and that's saying that we have this 1 up, 2 down off those lows. Now, that's a nice price relationship, but I also like to look for a time relationship. So what I'll do here is take the very beginning. So 15th of December was the bottom. I'll measure that amount of time to the top we put in there on June 26th. And let me just snap it there, June 26th. Yes. And then right there. So what I've basically shown here is the time relationship between how much time it took to do this initial impulse wave up and how much time we've corrected. Not just how much price we've corrected, I've already mentioned that, but how much time we've corrected. And right here is the 50% time correction. Now these time corrections don't always line up so perfectly, but I certainly like to look at them, and when they do line up, it's worth taking note. So that being said, the 50% time correction, so the exact day would have brought us to October 1st, and so far we've actually put in the bottom of price on September 30th, so just a day prior to that actual perfect 50% time correction. So I like that. That lines up quite nicely. So basically a 50% retracement in price and a 50% correction in time. 50-50, I like it. So I just thought I'd point that out. Also, as far as timing goes, I just like to point out that, okay, so we bottomed so far at the very end of the month of September, September 30th. And that also happens to be the end of a quarter. We've just started a new month. We've just started a new quarter. So it's very typical. It's not, a bulletproof rule, but it's a nice tendency you often see where you get a major low or a major high, depending on what you're working, right at the end or the beginning of a new time period, such as a month or a quarter, or in this case, both. So I like that confluence as far as, timing goes. And, I mean, what else we got here? So we got now, with ABC down for this Y, so within that Y wave, the relationship between A and C, the equality relationship for that, that came in right here at 8,130. So obviously we've poked through that a little bit, but it largely held here, okay? And then the next relationship I was eyeing up there was between this overall W and Y. So WY equality came in at 7,645.7, and we went pretty close on Bitfinex here. We went to 7,733. So, within $100 or so of that relationship. And then just below that, we had the E wave termination point of this wave 4 triangle. And that plays into the guideline for the depth of corrective waves. So after you have a 5-wave structure, if you're going to continue higher in another 5-wave structure, the correction of that initial 5-wave structure tends to correct in the span of travel of the previous 4th wave of 1 lower degree, which once again is this zone here. That's the previous 4th wave of 1 lesser degree. And it often ends near its termination point. And in this case, the way I've interpreted it or labeled it, the termination point is that E wave of that wave 4 triangle, which came in at 7,497. So basically 7,500. So again, we got pretty close to that. And then kind of my next relationships that I was looking at was the 618 retracement at 72.44. And then also the very bottom of this triangle, the most extreme low of it, was the A wave. And that came in at 6,999, so 7,000 even. So those were all kind of the relationships I was watching. You know, you're not going to hit all of them. But it's nice to have a cluster here to look for something to provide, you know, reaction off of. And I think we may have already had it. But if we do dig a little deeper, those are some additional relationships to look for, certainly. And you can see this channel I've drawn here, this corrective channel of the Y wave. We kind of came down near the bottom end of this channel. So that looks quite ripe and mature as well, as far as potentially having a low in place. Now, I'll probably jump back to this chart here in a bit. Well, before I exit to go to the shorter term stuff, let's look at some other technical factors here. So obviously, beautiful Elliott wave pattern here, either complete or nearing completion. Do we have any kind of other signatures we can look at here? Well, okay, we do. So we got very oversold here on daily RSI, and that got as low as around 20 on the daily RSI. But then over here, we made a marginal lower low in price, but you can see RSI made a higher low. So that was a little bullish divergence on daily RSI. So that's certainly a nice signature to see at a technical bottom. But also, it gets more, I guess, pronounced on the lower term time frames here, shorter term time frames. So we had a very strong divergence here on the 4-hour RSI. You can see lower lows in price, but very much higher lows on 4-hour RSI. That tells you that the downward momentum was, you know, weakening every time it tried to go a little lower. It was just a weaker push. Again, another nice feature of bottoming action. Much the same with 4-hour MACD moving averages. Very clear divergence there, bullish divergence. And I could go down to the hourly and show you that it was there as well, but I don't think that's necessary. Okay, so that was one thing I want to point out. And what else here? Okay, well, I'd also like to just show briefly, before I go into the shorter term structure, just the candlestick picture we're looking at here. So you can still see we're meandering in this 200-day moving average range. And it's not as simple as, well, if you're below the 200, it's a bear market. If you're above, it's a bull market. It doesn't quite work like that. You can have interaction with a moving average. It's not an absolute thing where, you know, it's just a line in the sand for a trend. That's not how I view them. More importantly, I'd say that, you know, your 50-day moving average is still well above your 200, so that's more important than just simply where price is in relation to that moving average, in my opinion. But in any case, what I really wanted to zoom into here was the candlestick formation. So you can see a bunch of long lower shadows, so that's just kind of an obvious rejection of those lower prices. And then here on the 30th of September, the price bar where we made our low, we did a nice bullish engulfing candlestick. So we engulfed 1, 2, 3 prior candlesticks, real bodies, very long lower shadow, pretty good volume coming in, and that's definitely a nice, you know, bullish reversal candlestick. So that's just something to point out as far as candlesticks go. And so far, we've just been consolidating that bullish candlestick. Certainly nothing to invalidate it here just yet. So that's really all I wanted to show there, just the fact that we had that reversal candle. Okay. Now on to this short-term, here we go, short-term wave chart here. So we're examining basically the internals of this Y wave. And actually, we're examining the internals of the C wave of the Y of the two. So these are all in lower degrees, obviously, because we're looking at the shorter term time frame. But they're the subdivisions of these larger degree, well, of this larger degree wave, which of course was a subdivision of this larger degree wave, which of course was a subdivision of this larger degree wave. but not to get too confusing here. So from this level here, okay, and to me we got, we got our impulse wave down. We had a 335 expanded flat B wave of the Y, and then the C wave we're just working as a simple impulse wave down. So I got a 1, 2, 3, 4, 5 of the 1 leading diagonal wave 1 down of Y. Then I got an A, B, C expanded flat wave 2 of the Y. And then wave 3 is pretty straightforward here. We got 1, 2, 3, triangle 4, thrust down and 5 for wave 3 of the Y. Or sorry, wave 3 of the C of the Y. I got to keep all those orders in mind there. Now, this is where it gets a little debatable, okay? So off that wave 3 low, which was at 77.96 here, it looks like we did a WXY, some sort of, corrective pattern, possibly for the 4. Then we did one final move down in the 5, and now maybe we're already working. And if I go down to the, let's do the 2-hour chart, maybe the hourly. Maybe we're already working the first little impulse wave up. Certainly looks impulsive, but I'll get to that in a moment. So I can certainly get a clean 5 waves out of this, no problem. 5 up, and so far this looks quite corrective to the downside. Very choppy, overlapping, slow moving. Hasn't done that much of a retracement yet. In fact, it's retraced just into the previous 4th waves area there, which is nice. So far it looks like we got, on a smaller degree, a 5 up and 3 down off that big bottom we did on September 30th. So I like it. I actually am leaning towards that being the bottom. This is our first little 1 up, 2 down, for instance. 5 up and 5 up for 1, ABC down for 2, and possibly getting ready to do a smaller degree 3rd wave up here soon. That's kind of what I'm leaning towards here. But I also have to take us back to the 4-hour. And there's also the possibility that this 4, okay, this wave 4, and let me just drag the rest of this over here out of the way a bit. We potentially, and just bear with me here, aren't done here, and we're doing something like this. A up, B down, C up for an expanded flat wave 4. Okay. So a 3-3-5 expanded flat wave 4, and we'll need 1 move down, probably not that far down, marginal new low. There'll certainly be divergences if we do go down here for 1 more marginal new low. 1 more move down, wave 5 of C, of Y, of 2. So that's kind of the 2 scenarios I'm looking at here in the very short term. These are just little nuances. Unquestionably, the bigger picture, the correction from June is either complete or it's nearly complete. We're just basically debating the very fine subdivisions here near the end. So I'm already loaded up on a full position, but I will certainly even add to it if we do get 1 more stab down. But I'm already happy with the size of the position as it is. So I'd certainly be more than fine if this was not the case. We're not doing this little expanded flat wave 4 to set up for 1 more leg down. I'd be very content if we just already had the 4 and the 5 in place for the C of the Y of the 2. Okay? That's fine with me. Either scenario, big picture, really won't make much difference, but short term, that is what I'm watching. So we'll have to see how it plays out. But just to go in closer there, once again, for the hourly, sometimes it's best just not to second guess yourself. So we have what can be counted reasonably as completed move to the downside. lined up with some nice, technical confluence areas on that longer term time frame. We definitely got, a clear 5 waves up to the, 5 waves up on this hourly chart. We got some sort of, I'm not going to put too much effort into labeling this. Let's just call an ABC down, just to make it simple. We got some sort of corrective move down. Okay. And as long as this kind of maintains, and let me just throw up, the one higher degree. So 5 up for 1, 3 down for 2. We get to 3, 4, 5. I'll get those out of the way because I just want to show that, the next expected move, if this works out, is going to be that 3. But, I mean, no need to really second guess it unless you're given a reason not to. This looks pretty good. We got a major technical pivot. We got 5 up off the bottom, 3 down from the top, and so far it's not a very menacing looking retracement. It's only retraced, I think, around the 38.2% level. So basically in between the 38.2% and the 50. And right here is that previous 4th wave, okay? And you can see we respected that little support level. Actually bounced just shy of touching it. So that's, short term, a decent looking technical sign of strength. So right now, if you're in a really short term trade, you can have a tight stop here and put it at, looks like it just below 8,200. So on this chart, 81.93 is the level. But if you want to try and have a tight stop, it's still relatively tight. You put it below the major low here. That's at 77.33.3 on Bitfinex, and that will vary a little bit from exchange to exchange, but whatever that is on your chart that you're trading, that's kind of the line in the sand short term for a bullish trade. But for me, I'm looking past this. I mean, I like the way this looks short term. I think it kind of strengthens the idea that the true low is in. Again, as long as we maintain this corrective structure and get more impulsive structure up, that's going to continue to be my opinion. But on that longer term time frame here, there's no mistaking this is a corrective move down within a larger uptrending market, okay? And I mean, Bitcoin has a way of exceeding targets to the upside. So let's do this. So a common relationship for 1 and 3 off of 2. So that's our wave 1 up, as I've labeled it. Wave 2 down so far. And let's just throw up the 1.618 relationship. So that'd be a very vanilla wave 3. I mean, if you look at this, so this 1, 2, 3, I think wave 4 was, like 4 times longer than wave 1 or something like that, maybe even more. So keep that in mind. 1618 in a world where you can get a 4x 3-to-1 relationship there. So let's just go up there and have a look at this. Okay, so that 1618, I gotta get zoomed out. This is just too bullish without having to rescale the chart here. Okay, so that 1618, measuring off our current pivot that we have, that would get us up to 24,801. And to me, that's a mighty conservative wave 3 target because that'd be breaking out to a new all-time high in Bitcoin. And it'd also be a large degree third wave. To me, you'd likely exceed the 1618, but again, just a nice technical target to have in mind. I mean, I'd be happy if it only went to 25,000, roughly. I mean, that's a huge trade from current levels. We're right around 8,000 up to 25,000. A 3x. Yeah, that sounds good to me. So I'll kind of leave it there. I don't want to get too far ahead with these moon boy targets for now, although I'm getting excited about them. And we'll just reset here a bit. So really, that's what I'm looking at here on Bitcoin. Short term, you can make a pretty decent case that the low is in. You can also make a somewhat weaker case that we need at least one more stab down, although I don't think it would be too dramatic, given how much bullish divergence you'd have on the technicals, and also all these other nice relationships that really aren't too far away from our current low. So either way, if you're looking at this as more of a longer term swing or investment style trade, it's still a good time to be buying here. And like I said, I'm loaded up already. I'll buy more if it goes down a little more, but again, be pretty happy if it just takes off from current levels. All right, so that's my take on Bitcoin for now. Hopefully that was helpful. Serial Trader signing off.